Gold USD moves in waves, creating patterns that can tell you the next big move. So if you can be able to identify patterns in the market and read meanings out from them, you can tell the next big move. Big institutions and big banks don't joke with patterns. There are several patterns in the market, but in this video, we are going to discuss one single chart pattern and how you can trade it and become profitable using only one single chart pattern. The amazing thing about this single chart pattern is whenever the big institutions or banks enters the market, this single chart pattern will occur, showing that the next big move is about to happen. So you want to trade with the big guys? Watch this video to the end, because if you watch this video to the end without missing anything, you'll be able to make insane profits with big guys. So without further ado, let's jump in. But before you do, I'm Jim Merigi. I've been trading for several years and I want to share my experience with new traders. So make sure you subscribe to this channel, turn on the notification bell, and like this video so you can get notified whenever I drop a new video like this. And also, if you don't want to miss the opportunity of becoming a profitable trader, then use the link in the description of this video to join our community on Telegram, where you get free trading tips, free trading guides, and free trading ebooks that can help you become a profitable trader. So don't waste your time. Use the link in the description to join our community. Now let's jump into our business. Like I said earlier, there are several patterns that we can find in the market, but we are going to discuss only one chart pattern because that is the one I have used and I can tell you that it works accurately. So now, what is this chart pattern? If you find it in uptrend, it is called double top or M pattern. If you find it in downtrend, it is called W pattern, or you can call it inverse double top. And also, you can combine it with any confluence you have, be it support and resistance, trend line, order block, fair value gap. The more confluence you have, the more accuracy you can get from this pattern. Now let's jump into our chart and see how to identify this single chart pattern and how to make insane profits with the big guys. And don't forget, if you watch this video to this point and if you want to become a profitable trader, consider subscribing to this channel so you can get more videos like this. Now let's jump in. Before we see how to trade this chart pattern, let's see how it looks on the chart first. And in uptrend, it looks this way. Maybe the chart is creating series of highs, creating series of highs, and creating series of highs. Then coming up, it will create a low, but this time around, it will be unable to break this high. It may have equal high, okay, and it will be slightly close to this one, okay. So let's see it have equal high. Now coming back, it will form a neckline. This low will become a neckline, okay. So once it breaks this low, that means maybe it may stop here and another candle will come and break it. Once it breaks it, wait for a test at that low, okay. Mark at the low, wait for a test, and boom, start selling. That means it looks like letter M. It can be like this, okay. Some people call it double top because it's have double top at a key level, okay. So once it breaks this, wait for the test and start selling. Or if you want to enter aggressively, you can enter immediately without waiting for a test. In that trend also, we have it like this, okay. So this is the neckline. Once it breaks it, start buying, okay. And you can also wait for the test before you start buying. So it means that in uptrend, we have it to be M pattern, but in that trend, we have it to be W pattern. Now you see how it looks, right? Now let's jump into our charts and see exactly how to trade this single chart pattern. So this is XAUUSD 15 minutes time frame, and as you can see here, we have uptrend, okay. So the price pushed up, retested, pushed up, retested, pushed up again, retested, and pushed up. Now at this point, when it pushed up to this point, the second push up was unable to break this previous high, creating what? M pattern. As you can see it clearly, if we zoom it, you can see this is M pattern. This one is the first head, that is the first top. This one is the second top, and here is the neckline, okay. So as you can see, this candle, this bearish candle was the one that break it, okay. Once you got a break, now place your shorts entry here once at this neckline, okay, and target the next key level, okay. As you can see, when it got broken, the market kept selling, kept selling, kept selling towards to this point, to this point. So using this M pattern alone, you can identify big moves in the market. If you go down to 5 minutes time frame, you will see a fair value gap exactly at this neckline. So now before we go down to 5 minutes time frame to identify this fair value gap, let us mark this area out so that we can be able to identify it when we go down to 5 minutes time frame. So now let me use rectangle to mark this M pattern out. Okay, so this is 5 minutes time frame, and as you can see, this M pattern. Okay, so this is M pattern on this 5 minutes time frame. Okay, as you can see, this M pattern, if we mark out the neckline, and here you can see there's a fair value gap at that neckline. When it was broken, the market came back to retest the fair value gap and immediately started dropping. As you can see, you can also add your fair value gap, and you can also add support, resistance, key levels, whatever. Okay, so as you can see, this is a psychological level. As you can see, this is a psychological level. 2950 is a psychological level. So when the psychological level got broken, the price retested to it. So you can also add your psychological level, key level, support, resistance, fair value gap. Any confluence you add, it can add meaning to it. And the more confluence you have, the more accuracy you can get from this single chart pattern. So here, coming back to 15 minutes time frame, you can see clearly the neckline. The neckline is the previous low it made. Okay, so when the big red candle broke it, another candle just retested to it, just touched it, and started dropping immediately. And if you caught this big move, you could have made insane profits. If you have any question, drop it in the comment box. Thank you. Also remember that no strategy can give you 100% winning rates. That is why you need to apply appropriate risk management. So if you find this video very helpful, then make sure you click the subscribe button, turn on the notification bell, and like this video so you can get notified whenever a new video like this drops. And don't miss the opportunity of becoming a profitable trader. The link to our community is in the description of this video. See you at the top. If you have any question, don't hesitate to drop it in the comment box. For now, goodbye, good luck.